Bitcoin is seen by many, including yourself, as an inflation hedge, yet it's down around 35% from its high. So what's going on here? Why have we seen this correction?
I think for many people, Bitcoin really is a risk asset, but this is, I would call them a group of marginal investors. They're not the core investors in cryptocurrency. They're people that are in Robinhood. They're people that are just essentially retail investors. And when something goes down in their portfolio, they need to raise money elsewhere. And we saw an extreme example of that in March of 20, when pretty much anything that had a bid was sold. And it was the long bond got sold, the stock market got sold, crypto got sold, gold got sold. Things that you would never expect to be correlated got correlated in a big risk off move. And I think we see a little bit of that when the Fed was clearly becoming a little bit more aggressive at fighting inflation. So I think that spooked the crypto market somewhat. But really, one of the greatest reasons for crypto investing is an inflationary environment. So the core thesis, if you believe that crypto is in fact an inflation hedge, is even more bullish now than it was. If the Fed is serious about fighting inflation, well, you better have an inflation hedge, because what if they can't do what they need to do?
All right, but one of the, as we said, common investment cases for Bitcoin is that it serves as a hedge against rising inflation. If we do have a more hawkish Federal Reserve, as Powell is indicating that it will be, do you see that sentiment, if nothing else, just the belief that the Fed can be effective, taking the wind out of Bitcoin sales?
I think it's a little bit like, if I gave you a gold necklace and you said, well, Roy, I don't like this necklace because it's not a good inflation hedge. Well, there's a lot of reasons to like Bitcoin beyond the inflation hedge aspect of it. And I really see Bitcoin as a remarkable, innovative asset that combines many features of cash, of a store value with a fixed supply like gold, almost a collectible, and the ability to have it rise tremendously in value because it is growing in its utility. So it really, in some ways, combines not just an inflation hedge ability, but the best qualities of other stores of value, the stock market, and cash, because of course you can transact with it anywhere in the world. And that capability is literally growing by the hour.
And speaking of down, after an absolutely atrocious weekend where $130 billion was vaporized off the cryptocurrency market, we are trying to see some green shoots at this hour. Bitcoin at the moment, slightly down, but some of its futures contracts are moving higher. And you got a major collapse, as we said, on Saturday. Sunday wasn't much better. The digital coin market is really struggling over the last 48 hours, with Bitcoin at one point dropping to nearly half of its record high of 69,000. Right now it's at 36,477, but it had fallen through the $33,000 floor. Ethereum still down about 6.6%. You've got Litecoin down 5%, XRP down 4.6%. What's going on in the crypto market? Here at a Fox Business exclusive is Bitwise Asset Management CIO Matt Hogan. Matt, what spooked the horses? And clearly, it isn't a flight to quality. It isn't sort of the safe haven that everybody kind of hoped it would be last year.
Well, one thing we know about crypto is that it's a risk-on asset. Anytime you see a violent shift from risk-on sentiment to risk-off sentiment in the broader market, crypto gets hit. It happened in March of 2020. It happened in the Q4 of 2018, the last time the Fed raised rates. Bitcoin was down 44% for that quarter. Importantly, after both those points, Bitcoin settled and then went on a significant bull run. Underneath the surface, the fundamentals of crypto are stronger than ever, but it is getting caught up in this broad-based shift to risk-off assets that hitting everything from Netflix to NASDAQ to, as you said, almost every sector of the stock market.
Zach, I really want to get you a Bitcoin call, or Goldman's Bitcoin call anyway. $100,000 a possibility, but it's down 20% in the past month. There are decent odds and are going the other direction just as powerfully.
So Bitcoin wears sensitivity to macroeconomic factors, just like other assets or other currencies. And Bitcoin certainly did not like the relatively hawkish FOMC minutes that came out earlier today, my time. Longer term, though, we still think good prospects for that asset. We see Bitcoin as a sort of macro asset akin to gold going through a social adoption phase. We think Bitcoin can take continued market share from gold over time, maybe reaching something like half of the store of value market, if you will. That would put the price somewhere around 100,000. So we would see medium-term reasons for upside, even if struggling along with other assets with the hawkish Fed in recent days.
Do you think Bitcoin's ever going to have any fundamental drivers, or is it always just going to be a function of technicals and sentiment?
Bitcoin is a macro asset that behaves very much like the other things that I watch on a regular basis. And price action in the last day, I think, speaks to that. We tend to see crypto assets, and Bitcoin in particular, respond to things like Federal Reserve meetings, FOMC minutes, much like we do other currencies. So cryptocurrencies are macro assets. They very much do have a sensitivity to these fundamental developments. It isn't just about sentiment and flows, although those are important for cryptocurrencies as well as for conventional FX markets.